There's a pattern that has destroyed every reserve currency in history. The Portuguese real dominated global trade for 80 years, then collapsed. The Dutch guilder ruled finance for 80 years, then died. The British pound reigned for 105 years, then fell. Each followed the same 7 stages. Each believed they were different, and each was wrong. The U.S. dollar became the reserve currency in 1944. That's 81 years ago. And by historical patterns, the dollar now exhibits the characteristics of Stage 5. This isn't speculation. It's a sequence that has played out 3 times across 600 years. 3 empires thought they were permanent. 3 currencies thought they were special. All of them collapsed. Exactly the same way. And the United States is following the same script line by line. Before we go through the stages, you need to understand what a reserve currency actually is. It's the currency other nations hold in their central banks, the currency used to price global commodities, the currency international trade is conducted in. When you're the reserve currency, every country needs your money. To buy oil, they need dollars. To settle trade, they need dollars. To hold safe assets, they need dollar bonds. This creates what economists call exorbitant privilege. You can print money and exchange it for real goods. No other country can do this at scale without destroying their currency. Other countries have to produce goods to earn your currency. You can run massive trade deficits because foreign nations need your currency for reserves. You can borrow at lower rates because global demand for your bonds is structural. Being the reserve currency is the ultimate economic advantage. It's also the ultimate trap, because every reserve currency follows the same pattern, and the pattern always ends the same way. Stage 1. Military dominance over trade routes. Every reserve currency begins with overwhelming military power that controls global trade. Portugal in the 1500s controlled oceanic trade routes. Their warships dominated the Indian Ocean. If you wanted spices from Asia, you dealt with Portugal. You needed Portuguese reals. The Dutch in the 1600s controlled global shipping. The Dutch East India Company had its own army and navy. Amsterdam became the center of world trade. You needed Dutch guilders. Britain in the 1800s ruled the seas. The Royal Navy was larger than the next 5 navies combined. They controlled every critical trade choke point: Suez, Gibraltar, Singapore. You needed British pounds. The United States achieved this after World War II. 11 aircraft carrier groups. Military bases at every trade choke point. If global commerce stops, it's because America allows it. Stage 1. Military dominance. Check. Stage 2. Massive trade surplus. Once you control trade, wealth flows toward you. Portugal ran enormous surpluses. Ships returned from Asia loaded with goods worth 10 times what they paid. The Dutch became the richest traders in Europe. Amsterdam was the warehouse of the world. Britain exported manufactured goods everywhere. The trade surplus built London into the financial capital of Earth. The United States from 1945 to 1970 ran the largest trade surplus in history. America was the only major economy with intact factories after the war. The world needed American goods. Dollars flooded into foreign central banks. U.S. gold reserves peaked at over 20,000 tons. Stage 2. Trade surplus and wealth accumulation. Check. Stage 3. Reserve status formalized. At some point, the world officially adopts your currency. For Portugal, it happened in the early 1500s. European trade treaties were written in reals. For the Dutch, it happened in the mid-1600s. Bills of exchange across Europe were denominated in guilders. For Britain, it happened at the Congress of Vienna in 1815. The pound became the global standard. For the United States, it happened at Bretton Woods in 1944. 44 nations formally agreed to make the dollar the world's reserve currency. This is the peak. Maximum power. But it's also where the trap begins. Because once you're the reserve currency, the world needs your currency more than your goods. So you stop producing. You start importing. The trade surplus becomes a deficit. This is called the Triffin dilemma. For the world to have enough dollars, the U.S. must run deficits. But deficits undermine the currency's value. You can't be the reserve currency and maintain a trade surplus. It's mathematically impossible. So Stage 3 always leads to Stage 4. Stage 4, deficits and living beyond, means Portugal hit this in the mid-1500s. The trade surplus reversed. They were importing everything: grain, textiles, manufactured goods. They paid for it with gold from Brazil, but they weren't producing. They were consuming accumulated wealth. The Dutch in the 1700s became net importers. Why work when you can live off capital? They shifted from producing to financing, lending to other nations instead of making goods. Britain by 1900 was running trade deficits. They imported food and raw materials, paid for it with investment returns from the empire. But British manufacturing was declining, factories closing. The United States entered Stage 4 in 1971. The trade surplus permanently reversed. By the 2000s, the U.S. was running an $800 billion annual deficit, importing far more than exporting. How is this financed? By printing dollars, exchanging paper currency for real goods from other countries. This works only because the dollar is the reserve currency, but it's living beyond your means. Stage 4, deficit spending. Check. Stage 5, currency debasement. When deficits become unsustainable, you print money. Portugal debased the real in the 1550s, reduced silver content in coins. Inflation exploded. Merchants refused the currency. The Dutch inflated the guilder in the 1700s, printed money to cover war costs. The currency's value declined. Britain debased the pound through 2 world wars, went off the gold standard, printed money to rebuild. The pound devalued repeatedly, 1949, 1967. Each time, international confidence eroded. The United States entered Stage 5 in 2008. The financial crisis forced massive money printing. Quantitative easing, $3.5 trillion created from 2008 to 2014. Then COVID. Another $7 trillion printed from 2020 to 2022. The money supply expanded faster than any time in peacetime history. This is currency debasement. Not by mixing copper into silver, by expanding fiat supply. Debasement doesn't cause immediate collapse. It causes a delayed loss of trust. Inflation in 2021 to 2022 hit levels not seen in 40 years. Stage 5. The debasement phase. Check. We are here, Stage 5, and history says Stages 6 and 7 follow inevitably. Stage 6. Loss of confidence. Search for alternatives. This is when the world starts looking for exits. Portugal lost confidence in the 1570s. Merchants demanded Spanish silver instead of reals. By 1580, the real was functionally dead. The Dutch guilder lost confidence through the 1700s. European powers shifted reserves to other currencies. By 1780, Amsterdam was no longer the financial center. The British pound lost confidence after World War II. In 1949, Britain devalued 30%. Nations holding pounds lost a third of their value overnight. By 1960, the pound's share of global reserves fell from 60% to 20%. The transition to the dollar took 15 years. The U.S. dollar is entering Stage 6 now. China and Russia have been dumping dollar reserves since 2014, buying gold instead, thousands of tons. BRICS nations are discussing alternatives. In 2023, they announced plans for a BRICS currency. Saudi Arabia began settling some oil transactions in yuan, weakening the exclusivity of the petrodollar system. This breaks the 50-year petrodollar system. The dollar's share of global reserves has fallen from 72% in 2000 to 58% in 2024. That's a 14-point decline. Trillions shifted out of dollars. Even small nations, Thailand, Malaysia, Indonesia, are settling trade in local currencies instead of dollars. This is stage 6 beginning. The world searching for alternatives. Not because they hate America, because they see the pattern. Stage 7. Replacement and collapse. This is when a new currency rises and the old one dies. The Portuguese real was replaced by Spanish silver in the 1600s. Spain's mines produced more silver than the world combined. The real couldn't compete. By 1600, it was irrelevant. The Dutch guilder was replaced by the British pound in the early 1800s. Britain's industrial revolution and naval power made the transition inevitable. By 1815, the pound was the global standard. The British pound was replaced by the US dollar from 1945 to 1960. Britain was bankrupt after World War II. The US held the world's gold and production capacity. The pound collapsed in devaluations. By 1967, the dollar had fully replaced it. What replaces the dollar? That's the question. And the answer isn't clear yet. China has production but doesn't control trade routes. The yuan isn't freely convertible. The euro has structural problems. Aging population. No unified fiscal policy. Gold is seeing record central bank buying. But gold can't scale to handle trillions in daily trade. The most likely scenario, a messy multipolar transition. Regional currencies in different blocks. The dollar in the Americas, euro in Europe, yuan in Asia, gold for settlement between them. It won't be clean. It will be volatile, unstable, and economically painful. But it's how transitions happen when there's no clear successor. When reserve currencies collapse, ordinary people lose everything. Portugal's collapse caused economic depression. Merchants holding reals saw wealth evaporate. The Dutch collapse devastated Amsterdam's middle class. Savings in guilders became worthless. Britain's collapse impoverished a generation. Pensions, bonds, savings, all denominated in pounds, lost value through repeated devaluations. The effects of reserve currency decline are now appearing in slow motion. Since 2020, the dollar has lost 25% of its purchasing power through inflation. Your savings, paycheck, retirement, if denominated in dollars, buy 25% less. And this is just early stage 6. If the pattern holds, the next decade will see accelerating decline. More inflation, more nations dumping dollars, and when stage 7 arrives, there will be a currency crisis. The dollar could lose a massive share of its value in a short period of time. This happened to the pound in 1949. It can happen to the dollar. But here's what's different this time. Every previous reserve currency collapse was regional. The real affected Portugal. The guilder affected Amsterdam. The pound affected Britain. But the dollar is global, embedded in every economy, every central bank, every commodity price. When the dollar loses reserve status, there's no part of the global economy unaffected. Over $70 trillion in dollar-denominated debt worldwide. Emerging markets that borrowed in dollars won't be able to repay. Corporations will face bankruptcy. Even developed nations holding dollar reserves will see their balance sheets implode. This isn't just a currency transition. It's a restructuring of the entire global financial system. And restructurings are never smooth. The Portuguese real lasted 80 years as reserve currency. The Dutch guilder lasted 80 years, the British pound lasted 105 years, each currency 80 to 110 years. The US dollar achieved reserve status in 1944. That's 81 years ago. We're at the average lifespan Not a prediction, just where history places us, and exhibiting every symptom of late-stage decline. Massive deficits, currency debasement, loss of confidence, search for alternatives. The pattern says what comes next. Stage 7, replacement. Maybe 10 years, maybe 20, maybe less if the transition accelerates. Breaking the pattern requires reversing deficits, stopping money printing, rebuilding production. These aren't just policy choices. They're politically almost impossible. Democracies don't vote for short-term pain. They vote for stimulus, for printing money, for avoiding hard choices. So the pattern continues. Stage 6 accelerates into Stage 7. 4 reserve currencies followed this pattern. Portuguese real, Dutch guilder, British pound, and now the US dollar. 7 stages, 80 to 110 years. And the dollar is at Stage 5, entering Stage 6. The timeline is clear, the symptoms are visible, and history says Stages 6 and 7 follow, not as possibilities but as probabilities bordering on certainty. This is how reserve currencies historically die. Not with invasion, but with mathematics. Slow, then fast. Ignored, then undeniable. And by the time everyone sees it, the transition is complete. If this showed you the pattern, the same sequence that destroyed 3 currencies and is now destroying a 4th. Subscribe. Because Stage 6 is unfolding right now. Central banks diversifying, nations seeking alternatives, the cracks forming. And when Stage 7 arrives, you'll want to understand what happened and why. The answers aren't in the future. They're written 600 years deep in the past. Subscribe, because the pattern doesn't care if you see it. It just repeats.